Hi everyone. Block reported fiscal year 2023 first quarter earnings results. So I've gone ahead and reviewed those figures and I want to share with you the big picture items from Block's earnings. And I also want to update my recommendation on Block stock. Going into the earnings, I had Block rated as a buy, and I'm going to update that recommendation and let you know if it's still a buy or if that has changed. So let's look over the results. Total net revenue increased to 5 billion. This was up from 4 billion in the same quarter that ended on March 31st last year, so year over year growth. Now, some of that was due to some Bitcoin trading and transactions. About 400 million of that was from that. So even if we excluded that, Block would have still reported revenue growth up to 4.6 billion from 4 billion. So they still demonstrated growth even if we exclude Bitcoin revenue. The net loss improved to 17 million. This was a huge improvement from a net loss of 204 million year over year. Of course, Block is home to the Cash app, and as of March, the Cash app boasted 20 million active card users. This was up 34% year over year. Very nice growth in that segment. If you measured the Cash app alone, not the physical card, just people who have the app on their phone, there were 53 million monthly active users in March, and this was up 38% year over year. So a very robust growth segment for Block. And that's helping improve its cash flow from operations to 294 million, and this was up from 229 million in the same quarter the prior year. So overall, performance wise, very good quarter for Block. And if we look at the balance sheet, they have 5 billion in cash and 4.1 billion in long-term debt. But given their robust cash flow from operations, that long-term debt appears to be serviceable as long as they can continue generating these levels of cash flow from operations. Overall, to update my rating on Block, I would say it's still a buy. I didn't see anything in this quarter to change my recommendation, and I was looking how the business would react as there was some turmoil in the banking industry, and that didn't impact Block's actual business operations negatively the way I thought it might. So that risk was somewhat reduced, and the balance sheet looked solid. They generated very nice cash flow from operations. Revenue growth was okay. I wasn't expecting incredible revenue growth, and they kept costs under control. Net loss improved to 17 million, up from a net loss of 204 million. And then heading into the earnings, Block stock was not expensive. It was trading at a reasonable valuation when you look at it from the price to free cash flow metric and other, valuation metrics similar to that one. It's not very expensive. So for all of those reasons, I would reiterate my recommendation. Block stock is still a buy in my view, although I will say this is not for the risk inverse investor. This is more for investors that are looking for above average returns and are willing to accept above average risk. This stock has above average riskiness compared to the average stock in the market. So if you don't like risk, if you don't like fluctuations in the stock price, then Block is not one to be purchasing. But if you don't mind a little extra risk for a little extra return, then Block can be okay for you. All right, that's all I've got for this video. Thank you so much for watching. I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.